The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this Tuesday, the last day of March the 31st. And most importantly, we'll see what the candle holds for us in the monthly chart. It's going to be very, very interesting. Right here, I want you to talk about the Chapman wave methodology. They go from the lowest, most obvious low bar to each successively higher peak. You expect that there should be 4 peaks if there's a buy signal that goes to a buy mode. At that point, other things can happen. What are we looking at? We're looking at the 10-minute June S&P E-mini. Trading at 2,072, down only 3. S&P is down 6 at 2,080. Dow's down 64 at 17,911. Comp index is down 15 at 49.31. You got gold up 2.5 at 11.87. Silver's up 3 cents at 16.71. Platinum's up 18 at 11.39. You got high-grade copper. Let me just check it on something here. Let me move that away. Just put that in here. High-grade copper is, in fact, whoops, where did it go? I didn't mean to do that. Can't finish my conversation about it, but I'll click. Something new that I had to get used to. Yeah, high-grade copper is down a fraction. It's at 2.769. Made a very strong leg A, single leg A up. Pulls back. That 9-period moving average at 2.75. Going to be very interesting how that holds up. All right, let's go back to the charts we were looking at here. And when I was talking about the Chapman wave methodology, what I was saying is it was in the context of looking at 4 higher peaks. It is at that 4th highest peak that a whole bunch of things can happen. And look what happened here. You've got a cup and ladle breakout pattern in the E-mini in the 10-minute. And that says that if you break that left side lip, in this case, the lip of 2070.50 made at 5:30 on the 31st, that's 5:30 this morning. If you take it out decisively, it should go to at least a leg D. So the buy signal to buy mode says you should go to a D. The cup and ladle breakout says you should go to at least a leg D. And at that point, you should come back and test the lip. Well, the left lip, as I said, was 2070.50. What was the low of the bar, 10-minute bar just a moment ago? 2070.50. So it's tested that. Now comes a whole bunch of other action that we're going to be looking at. Does it break above 2076.75 to start leg E? Yep, it just did that as we're speaking. So that's what I mean, that at leg D, it goes to peak D within 1 to 3 bars. If things that happen by either going up or breaking decisively to the downside, a change of trend or a continuation pattern is unfolding. So we're going to be watching this. I'll move it aside now. We'll get back to our numbers. So we'll watch that when we get back to it in a moment. Let's look at the TLT. I'm going to have to click on that there. Oh, I must finish with this. This is the daily, and this is the 120-minute chart of the E-mini. The daily says that we're in the middle of this up, down, up, down, up, down, up, down pattern that has just continued forever, it seems. And yesterday was a monster move to the upside. Today, earlier on, we gave it back quite decisively, and now it's trying to get right back to towards the opening of yesterday in the E-mini, which is at 2052.75. Oh, that can't be right. How can that be? That was yesterday. Oh, sorry. That was the close. 2075.50, and we're testing it right now at 2075. So, and this is the 120-minute chart. Look at this up channel, and look at the inside track support level that's held. And what I'd said to subscribers this morning is that the MACD has sort of flattened out. If it had a very wide disparity between what I call the fast-moving average and the slow-moving average, that's the green line and the red line, the 9-period differential. And if that was very wide and the histogram showed sharp moves to the downside, then I would have said, oh, that's very, very bearish. But since it was just flat, it was the stochastic that was quite bearish, and the stochastic continued lower. And now look what's happening. You've got that bounce because of that flat MACD. That flat MACD also says there should be fairly limited upside from here, and then there should be some testing until that line crosses positively. So now let's move this away and let's get back to our story. The TLT. 20-year Lehman iShare Treasury Bond Fund ETF trading at 130.83, up 42 cents. It's gone into this rectangle pattern that's kind of flattened out here. After this leg B, there should have been within 1 to 3 sessions a new leg C above 132.76. Or there should have been a breakdown below the low of the 26th of March of 129.18. Instead, what's happened, if we get into the 120-minute chart, you can see what we've done. Gone to a peak E in the 120-minute chart of the TLT, pull back towards the 200 period exponential moving average, this orangey line, but it has not broken that. It's treated it not just as support because it hasn't even touched it. So this is very good because what it's saying within this context, you could get a small peak A, maybe a B. If it makes a B and that B is at a 131.47 or higher, that'll be very positive. If it just continues in this meandering sideways move, then what you can expect is this pattern right here, an H that goes to a lowercase m pattern right there. All right? So I'm going to draw that in and keep it there. Now, bonds themselves have a very similar pattern, except for one little difference, that the rally from the recent low at the open this morning has gone all the way to 164 and 130 seconds. So it's up 1830 seconds. This is actually a far more powerful chart formation, a potential. If it takes out this left side high of the at 4 o'clock on the 27th of March at 164.5. If it takes it out decisively, that says the next level for bonds will be to test the 165 and 732nd level. All right, let's get out of that. And we want to talk about what? We want to talk about the dollar. After all, everything's really hinging upon this dollar action. Dollar action early this morning was very positive. It's had a very nice bounce, leg E, leg A. I call it a gray A. Why? Because the move was not really confirmed with the technicals. It was really just a price move. And if you look at the, let me put this in here. So in the dollar 120-minute chart, we've got leg C, D, E, and a spiral to a possible F. I'm calling it F for now because the stochastic turned down sharply, the MACD's turning down. And I'm calling it an F, and that says that over the next 12 hours, there could be a bit of a pullback in the dollar. Let's see what would happen to gold. Gold is right at a point now where it's trying to find some support. So this is actually the opposite chart pattern that we were looking at of the TLT, actually. Actually, more the bonds. Anyway, so this is leg A in the 120-minute chart. So I'd drawn this pattern in a while back, maybe 3 days, 4 days ago. As we were making the top, I drew in that rectangle, but we've gotten down to the lower end of the rectangle of gold. My suspicion is that gold is in a trading band. It's not going to break down. And if it does pop up, it's going to be a very quick pop, and that'll make 1187.70 right now. That would make the 1193 area quite critical. If it closes nicely above that, then the previous high of 1220.40 made at 1715. That's at 5:15 in the afternoon, I think it was, on the 26th. That's going to be a very important level to be looking at. All right, so we've gone through a couple of these things. I wanted to just quickly do the IWM. IWM is holding very well, holding the 9-period moving average after making a peak E. I'm calling it an E for now in the daily, and a leg E, possible peak E if it doesn't get above 126 and 30.32 by Friday. and that would suggest that we are making some kind of a shorter-term top here. I suspect from all the action I'm looking at, and yesterday's big spiral to the upside, and today's give back, if today was up 100 instead of being down 100 earlier on in the Dow, I would have said to you, wow, we're going to test the recent highs, and April will see new highs. At this point, it's not that simple. IWM shows you there's a lot of resistance. QQQ is struggling to move towards the 109s, and right now it's at 106.59. It's actually struggling to get back to 108s. The New York Stock Exchange, NYA.X, the New York Stock Exchange is also struggling. I suspect that we're having a consolidation. We're having a distribution going on right now, which is one of the reasons why some stocks are acting fantastically and others are acting just terribly. And I'm going to be watching things like the XLV. The XLV is, in fact, the iShares. No, sorry, it's the S&P Select Healthcare Spider Fund. Made a peak D in the weekly chart. The monthly chart is the very big issue here because it doesn't even know that there's been a little bit of a consolidation. No one told it because it hasn't even budged. It looks just resolute on holding up here. But it's going to be for the daily, which made a peak G/A. I'm calling it a possible G right now. That looks to me like it's struggling now. It had that spiral to the upside mid-March, and then it just sort of stalled. It's got that Eiffel Tower look to it, and I'm going to be watching it real closely for a couple of reasons. One is that weekly chart went a little higher than I thought from the arch formation that I'd already drawn in, but that doesn't really change the pattern that I was looking at in the technicals. And the technicals are suggesting that the stochastic's pulling back. On-balance volumes already made a downturn, still strong. And the leg D that went to a peak D has a characteristic that says that if the MACD cannot expand the 9-period differential above the slow-moving average, there's a real good chance it's at 73.58, down 20 cents right now. There's a real good chance that the 72.34 level, the 9-period exponential moving average in the weekly, will be tested. MDY question in the den. Yep, I was going to get to that. Haven't updated. I don't think I've updated. No. That spiral to the upside. Now, MDY was the leader of the pack. This is the 400, kind of the mid-level S&P mid-caps. The weekly chart I've got as more likely a G than a B, which says if there is a very strong pullback at the level of 230.81 made in October will hold. It won't get there. It'll come towards there and then move higher. And that says that that's probably a leg B. Otherwise, if it breaks that, it's going to be a G. Most importantly, the weekly chart still has 86% in the stochastic. MACD is good, and the daily is what we need to look at. So I'll finish notating the daily in a moment, and then we'll be back, and we'll be back, and we'll get to Jerry in the Back Bay. Be right back. Basil Chapman, Dow's down 24.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. We're back, and let me just finish this share. Just put this notation in. Okay, we got to go to Jerry in the back bay. Jerry, how are you?
Good. How are you?
Thrilled that we're starting to see a little light at the end of the tunnel here.
Right. A nice day.
Beautiful day, yes.
Yeah. I'm interested. I feel very strongly that the euro is going to go down because of the ECB policy of QE and the fact that they charge negative to hold for banks to hold short-term paper from the ECB, and this is going to. As they pump in $60 billion a month of new euros, it's going to weigh on it, and it's going to go down to par.
So I agree with you that I don't know about the par just yet. I think you're right, but we need a little more evidence. At least I do. But most importantly, what I'm looking at here is that the ProShares Ultra Short Euro, which I've just finished notating.
Yeah, I'm looking for an entry point.
Has the same pattern, of course. I'm sorry, what?
I don't own it. I'm looking for. It got overdone, and I'm looking for an entry point that would be more logical.
So now this is what I'm looking at. The chart itself, let me just do this. Here's the monthly chart for anyone looking at my charts. The one on the left is the daily. I've just covered the weekly. I've got the monthly extended to the side here on the right side. Now, if I do this, just keep looking at that chart, and all of a sudden I'm going to do this. Do the charts not look very similar? And what I've done is I've substituted that chart for the dollar index. Now, that makes sense. Why? Because the euro is...
I know that, except I personally believe that the euro is going to get hurt more than the dollar gets strong, because the euro is going to be particularly weak. That's my bet, sort of thing.
So
but it's going to be it's going to be a close relationship, because I think the euro is like 60% of the dollar index.
Something like that, yes, 60, 63 or something like that, yes. So what we're looking at, folks, is that I just substituted the dollar chart for the, let's go back to that, and that is the EUO. Of course, it's a pro share, so there is some difference in the chart pattern because there's the degradation at the end of the day that comes about with these charts in the pro shares. But that's not the point. The general pattern, the fractal, looks really similar. And what's happened is you've got a soft W formation that broke out like a bowl formation. Now, what I'm looking at is that the MACD is starting to flatten out at 95% in the monthly chart. I'm sorry, I meant the stochastic is starting to flatten out. The MACD is still streaming to the upside. And what happens, I must mention this because I take it for granted. I've looked at the MACD for 20 years or whatever it is. Right. But most people don't realize that what you're looking at in that green line, the green line, which is the 9-period exponential moving average differential, I treat it differently. First of all, I call it the faster moving average, and I make it green when I've got a white background, and red is the slow moving average. But most importantly, you can see, I'm going to show you the line of the green, and just follow this line. Look at that line. Look at the way it deflected lower from the red line, and then it went up again. Now look at the chart pattern. You see that the chart is represented really well by the green 9-period differential. So you can actually, you should be able to tell what the price of the stock is doing by looking at the 9-period moving average differential. When in fact there's a divergence, that's when you got to be aware that something different is happening. So now what we're looking at is that the 9-period moving average, the green line in the monthly chart, is becoming rather overextended, but it hasn't yet even signaled that it's going sideways. My suspicion, based on the candle as we're looking at it right now, says that probably in April there's going to be some choppiness. We might even form a peak by not making a new high yet. It might be a consolidation taking place in April. We won't know for at least another week or two, and I'll show you why. But at the same time, there is nothing technically wrong. Everything here is exactly what you want to see in a very powerful move. When the tide, the major tide, is building like a tsunami to the upside. Now we can look at the weekly chart and say, hey, the MACD is flattening out. It's gone to a G/C. It could fail at G. And one of the reasons why I say there could be a failure here is just simply because when the moving average, the 9-period differential, especially again the weekly chart, has not gone back to the 9-period moving average, to the slow moving average, the red line. When the green line has not crossed negative to the red line, that says that the high that's made is often a G. It doesn't even get to a D. I'll talk about that when we get back. I think you're on the right. You're on the right, looking out. You're on the right side. But I'll be back.
Maybe I should wait.
With Jim.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Dow Jones 79. All these rallies seem to be petering out here. -7 on the S&P. We'll see how the close is. But I got a suspicion here that the tide is changing, at least for a consolidation, if nothing more than that, because of many factors. Anyway, we'll talk about that. We've got Jerry on the line right now. Jerry, so this is what I'm thinking here. That the euro, I based on the EUO, which is, as I say, not a perfect, not an ideal setup. It's the best
right,
we've got
I
right
know.
now. Do you know what the 1-to-1 is? This is the pro shares.
I know that I cannot find a 1-to-1. There is none.
Yeah, I think they had the 1-to-1, and I think this is the more successful. So it's been the one that's been the favored one. All right, doesn't matter to us. It's the same, pretty much the same chart pattern. You see the pattern that I'm looking at based on the Chapman Wave methodology. This is what I'd be looking at. The rally that we've just seen over the last 3 to 4 sessions is very important. But what it is saying, if you look at the technicals, if you look at the breakdown in the technicals, it's saying that there's a real good chance that this will not make its way yet to the top of the March 13th high of 2858, that there's probably going to be some kind of a U-shaped pattern. It's that H pattern that I always talk about, the lowercase h. And that's really what I'm thinking. It doesn't mean to say there's another thing that we've got to be aware of. It's just a possibility. I don't think it's going to happen, but there's just the possibility that we could be looking at what's always talked about here at TFNN, the A to B equals C to D. I call it, it's in this case, it would be a pattern that I call, let me just draw it in here. I'm not expecting it right now, but it's a pattern that I call the, here we go, new parallel. It is the time price match. So this is the one-to-one, but it's really based on other criteria that I look at, and would say that from a failure within the next 2 days or so, and this would match what I'm thinking, that if the dollar, which has been strong and the market's gone together with the dollar, it doesn't have to be this direct relationship. But if you see a relationship, I expect that the relationship will continue until it doesn't. So what I'm looking at is that if the EUO, which is trading at 27, up 38 cents right now, the ProShares Ultra Short Euro, takes out the low that was made on the 25th of 25.78. It closes decisively under that, goes to about 25.40 to 25.30. I have to suddenly say to myself, uh-oh, there's that Chapman wave parallel move to the downside, like an A to B equals C to D. It's the same concept, except the difference here is it's a parallel line. And what it says is that when we start to turn down, if it's the next 3 days, then by the 8th to the 10th of April, the whole principle behind my technique is that it gives you a time price match. And that says that if we break down in the next 2-3 days and go underneath the low of the 25th in the ultra short euro, there's a chance that we could get a one-to-one to go all the way to 24.20. That's really the issue. Now, if that happens, all of a sudden you've got a weekly change because the MACD will pull back, probably start to test the red line, and the stochastic will definitely get to about 76. Then all of a sudden we're looking at not just a 2 to 3 week consolidation. We're talking about, and this is really what I'm thinking, that the dollar has the chance, and the euro, in this case it would be the euro.
No, I understand. I agree.
Short would have a consolidation going to the end of April, the beginning of May. There you are. And that would match what I'm looking at in the market itself.
So you would wait on that thing?
I definitely would. Let's put it this way. I don't think you're going to lose anything other than a little bit of time because it's trading at 27. Even if it goes up, I'm willing, well, I wouldn't say I'm willing to bet. There's a really good chance that at some point over the next 2 weeks, you'll be able to buy it again at 27 or under 27, even if it rallies from here.
Yeah, okay. All righty. Thank you very much. Good analysis.
Thank you for calling. I appreciate it as always, Jerry.
I appreciate the depth. Thank you.
Thank you very much. And I didn't get to the 120-minute chart. It's in A, B, C. I think it's in C right now. Yeah, it says that it's really close to some kind of a pullback. So now let's do a couple of things here. Well, first of all, there's something that was mentioned in the den. Last night, there was a documentary on cancer produced by Ken Burns. And it was really, it was in-depth. It was very touching. It went to different areas. I always find with Ken Burns that you personally can have your own ideas of where things can go. For instance, his documentary on jazz, I thought there were a number of areas that he didn't touch on or not long enough that would, for my particular taste, would have been so superior to giving an overall aspect with a significant series of performances that were both life-affirming because they were so inspiring and fantastic, like Benny Goodman's 1939 performance of Sing, Sing, Sing at Carnegie Hall with the cadenza that went to that high G. The other thing is Ken Burns didn't, as I recall, he didn't spend enough time on Louis Armstrong right at the very beginning. His Hot Five, which is really a breakthrough group, Dixieland, just unbelievable. So that's just personal. And I felt a little bit of the same thing in this first part of the 3-part documentary on cancer, that there was an aspect that he dwelt on that I would have actually moved away from it to go to some, but that's just personal. He does fantastic work. There's just no question about it. An absolute master of his art. And you can imagine how many thousands of feet of extra film. In this case, it was video, but how many pieces of video were just discarded because of what he chose. It's very interesting. And shame there was this one thing with this little boy. I remember when I was having my cancer treatment back about 10 or 12 years ago, at the Beth Israel, and you see these little kids come in, 5 years old, 6 years old, 10 years, 12, and they got no hair, and you just say to yourself, wow, I mean, what they have to go through, and at that age, not to be, to be missing their friends, to be missing school. When you get old, you say, hey, that's life. But when young people have these particular diseases, it just tears at your heart. It's just words, you cannot put into words the emotion that one feels. You just well up inside and say, wow, poor parents, poor kid, poor everybody that's involved. Even the doctors, I mean, they're doing their absolute best. Hey, all right, so let's move on. What we're looking at here is that the Dow is struggling. And we're going to be looking, let me take a moment here. I want to look at the VIX index. I want to discuss something. This is a perfect time to do it. The volatility index is only up 11 cents at 1462. It's formed a trading block. Now, if you look at the Dow, look at that trading block. We're basically where we've been for a very long time, at 17,893. Look at the S&P, SPX.X. The S&P, been here for a long time. IWM, nice move. That has not been here for a long time. That's breaking out. So you've got some leadership in the IWM, the Russell 2000, but I think that's starting to fail at this particular point. I think we're going to get a peak E this week in the weekly chart. I'm thinking, I don't know. Look at the IW. Let's go back to the MDY, that is, the mid caps. That has broken out like the IWM. Right now, in fact, it has a pattern. Gee, this is really interesting. IWM and the MDY. Very similar patterns. And both of them have monthly charts that don't even know anything's happening. They're just going about their business. They're strong as ever. But here's the hint that something is happening. And it could happen quite quickly, actually. So I'm watching this and I'm saying, all right. Moving along the 9-period, just walking the 9-period moving average. But wait a minute. The stochastic now is much lower than it was when we were just making peak D and E. The MACD has a chance to deflect lower if, in fact, the first week of April sees lower prices and has the MDY, which is minus 107 right now, 277, go to the 275 or lower area this coming week. Let me just put it this way, 274.50 or lower area. And if you're looking at the weekly chart, that weekly chart is saying very, very nice action, but the MACD is flattening out. The histogram is starting to decline a little bit. Those little green lines, the gray lines of volume. The MACD is, the on-balance volume has just made a little top at D and is pulling back, and the stochastic is lower than it was at peak C. That's not all, none of this is a negative. It has the potential to be a negative. So here's the way I'm analyzing this. If the MDY and the IWM break 3 points lower in the MDY, I think it's 1.5 points. Yeah, about 1.5 points. Let me make it simple. It's a 124.12 in the IWM. If it breaks in the next week and a half under 121.54, the low of the 26th of March, that says really good chance that the weekly is going to make some kind of a top. So I'm looking at this and I'm suggesting that this is a time more for caution. In fact, in my opening call, we've gone really more to the short side. There's one trade, I'm not sure how many people were able to get it off this morning. It was hit, the number that we were looking for. If you were one of the lucky ones, congratulations. That's suggesting that if what I'm looking at, which is a weighting more towards the short side now than the long side, if that is correct, we will know, we should know very well by 4 o'clock Friday. Oh, of course, Friday is a holiday, Easter. Happy Easter, everyone, and start of Passover. So let's call it Thursday at 4 o'clock. Just 3 days to go, 2.5 days to go. If at that particular point we are seeing lower prices than we have right now in the indices, look at the NYA. New York Stock Exchange, very broad. It's struggling to get to, it's at 10,009. It's struggling to get to holds above 11,000. If it holds above 11,000 Thursday, I'd say that's a good sign. But right now it says consolidation is unfolding. Now, this is the reason why I believe that we're actually in a distribution phase. Let me just click this to see if there are any emails coming up. We're in a distribution phase. Let me just use the Dow as an example. Now, I know that many people here talk about the Dow and say it's only 30 stocks. Hey, I've been doing this every single day as much as I can, almost, even when I'm away in Australia, wherever it is. I try to do this. I give a call on the Dow. Been doing it since the 1970s. I believe very strongly, and in fact, let me just pull up these charts here while we're doing this. Not here. I'm going to get out of this, close this workspace, and I'm going to go to this workspace right here. Long-term charts, right here. You tell me, have a look at this chart, and tell me, of course it's not this chart. Oh boy, where did I put it? Is it here? All right, it doesn't matter. I'm going to use this one right here. That's not really fair. Yeah, it's okay. You look at this chart, and you tell me, if you can tell, look at the trend line. See that trend line? None of these have broken the trend line. Some are a little bit higher, some are not. Which one is the Dow? Very difficult to say, right? Well, it turns out this is the Dow Diamonds, which of course is the same as the Dow, right there. But look, it's very much the same as the Qs. It's very much the same as the IWM is making much nicer, higher highs and higher lows than the Dow. The Dow. It looks a little bit stronger, but they're in the same trend. They're doing the same type of thing. If you overlaid them, there'd be a slight difference. But in fact, I think that the Dow, for me, I do the S&P all the time. But the Dow is the one that I do most of my work on, just in terms of the analysis, of the daily analysis, the weekly analysis, monthly analysis. And it says, in this top one here is Union Pacific. I was told all along, maybe 7 years ago, someone said, I don't even remember who said it. Someone said, watch Union Pacific. When that gives you a sell signal, watch the S&P. And when the S&P gives a sell signal, watch to see if the Union Pacific is in agreement. Well, it turns out that I did that for a long time. I never used it ever as a particular technique, but I used it as something that's really worth. I remember at the time respecting this person's opinion, and I thought, okay, that's something to keep in mind. Well, here it is. There's the overlap. Red one is the what? Is the S&P. The green one is Union Pacific. Now look at them. They kind of go in the same direction, but I've made a note of some of the tops in the Union Pacific that didn't really agree with the S&P. So I take all bits of information and I put it into the pot, and then I sort it out and say what holds.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Dow's down 100, S&P's down 8.76. Hey. Couple of good questions in the den. Would I look at Twitter, and S&P asked, would I look at WUBA? Or didn't even ask me, just said WUBA continues to move up. Yeah, we were looking at WUBA, which is 58.com Inc. Gee, I didn't even remember that. And I typed in here, excellent action, has 42 support and should try for the 45s after a brief digestive session or two. And Don, I forgot to put in what the date was because I did this during a break during one of my shows. Well, lo and behold, I think it was right there, going to D. And lo and behold, it broke above D, above 47.37, and went where? To E/A and then F/B. So it's at 53.29. Outstanding. You see, there are certain stocks I think are just, they're not market influenced right now. I would love, and then the weekly chart is in new leg B as I read it. Let me just double check. Oops. Yeah, I call that new leg B. And the monthly chart made a peak A, then digested. And if it goes above 58.89, that would be a leg B. And it'll be an overlapping. Wow, that would be very good. So it's acting very well. So that's WUBA. WBA is a symbol at 53.48 up 2.48. I believe it's Chinese something or other. So Twitter is, in fact, also acting quite nicely. I've got an alternate count here. It's at 50.63 up 74 on a day like this. That's good action. Fund managers are looking for those specific areas, those specific stocks that have had really good consolidations and are now starting to break out, ignoring the market. Twitter might be one. All I can say is it needs to hold 46 at 50.61 right now over the next week and a half. And if it does break above 51.87, that's very strong action. I would call that leg C and not leg G. That would be leg C and very positive, and say it's going to the 55.99 cup formation in the weekly chart. Wow, very nice. Same kind of pattern as WUBA. Okay, now let's do this quickly. Let me go back to the VIX index. This is what I wanted to say. The VIX index is not doing all that much. It's only up 28 cents, up $1.90, up 1.93%. I suspect that the VIX index is going to make a sudden move, and it's only going to do that if there is a persistent move down towards the end of the day. Then it'll start to activate and it'll get to the 1546, 1560 area. But if that doesn't happen, it's saying, wait a minute, be careful. You're still in this choppy up, down, up, down, up, down range, sideways trading area. My suspicion is that, in fact, what we're looking at is that the weekly chart on Friday is going to give us all the information we need to know about the beginning of April. And that is if the VIX index is anywhere above 1560, especially if it's close to the 1670 200-period exponential moving average, that will suggest to me that I'm correct in pushing subscribers towards the short side in our positions, with just one long, which has done outstandingly. It's gone to leg D. I'm expecting a peak D. It should pull back and then go higher in the weekly. That's the way I'm looking at that one stock. The others we are looking at as potential shorts or shorts that we're going to add to. And then we did add one this morning, brand new, that we haven't been in for a while. We'll see, because if that one starts to head down, that's talking about the economy. So that's the way I'm looking at all this stuff. And all I can say is that the dollar looks to me like it's still in this consolidation phase, that it might rally a little bit more, but it's just going to be stuck in that range. That means that the euro is stuck in this range. And that says, watch the TLT, because the TLT is not moving that high right now. It's only 20 cents up. If the TLT, see, all of these charts are stuck now in a fairly narrow range. The dollar, the euro, the TLT, bonds. And this sideways move, if they break the recent highs, they can go higher. If they break the recent lows, they can go lower. But until then, they kind of trap. So this is a really important week. Hey, stay tuned. We've got chat coming up, great options program, and I'll be back tomorrow. Have a great day. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.